start recording as I told you. So what I'm going to do now is pop up the poll question and just ask you if you have any questions. If you don't have any questions on this part, just click no. Lets me know that all of you are there. If you do have questions, say yes, and then in the chat, ask the questions. Remember, the stuff in the chat comes up for the full group, so.
It's just showing a black, like, rectangle for me.
Okay, thank you.
Yeah, I see the same.
Yeah, me too.
Yep.
That's weird.
It's just
It
a
looks
black
like your
rectangle on my screen.
Yeah, it looks like your full screen is just like glitching out right now. Oh god.
How?
It might be because you're only sharing the oh, there it is.
Yeah, but I don't know if you can do anything with that. You guys can see it,
Anything.
but you guys can't do anything with it, right?
Mm-mm.
I don't think so.
All right, let's see if we can try that again. It worked in the other class. But you guys have to, or I have to get a setting right. So let's see. That's my fault. Okay, let's try it again. Did that work better at all?
No.
Mm-mm.
Nah.
That's so bizarre.
Did you do it while your screen was shared in the last class?
Yeah, I did, and it popped up for them, but I don't know why it didn't work. Well, you guys are more willing to talk anyway, so if you guys have any questions or anything so far, let me know. Okay. All right, if we're good. All right, so now we're getting into, oh, good, we got one. Okay. All right. So now we're getting into inventory systems and inventory methodologies. So a few notes about inventory. Two types of inventory systems. And the first one is perpetual, which you can think of as kind of computerized, but really with transactions in inventory are recorded when the transaction occurs. So this gives us the ability, it's like half my screen. Oh, okay, that's better. This gives us the ability to track inventory in and out, and for somebody to say, okay, I've got 5 of these in stock. And this has been much more common with the low cost of computers. So you can essentially think about this as being computerized. Not that the other one's not, but it's not updated on a regular basis.
It says transactions with are recorded, or what are they with?
Oh. Should say in inventory. And I guess with inventory is really what I wanted there. And so the inventory is updated as transactions happen. It's a jogger, it'll go by quickly. All right, and then there's periodic. And this is a more manual-based count system that gets updated at the end of the period. And so essentially, a count is performed at the end of the period to report the inventory. And so until that count occurs, you don't have a true idea of how much inventory has been used. So essentially it's like what we did with supplies. It's also a little harder to keep track there of inventory and whether or not it gets stolen or damaged. Everything kind of gets dumped into cost of goods sold. And then you have kind of the recording or cost flow. And keep in mind here that these cost flows are used for accounting purposes, accounting records purposes, but not necessarily to match the actual flow of inventory. And so what I mean by that is that if you're using a first in, first out system, that's pretty obvious for something like milk. But if you've got a bunch of washers or dryers and you're stacking them up and you've got literally hundreds, you may still use the first in, first out method for cost flows, but you're just going to take the last one because your washer and dryer is not necessarily something that's going to deteriorate. So you may not use that as your actual flow. But things like food, typically that has a flow of first in and first out. And so they have a few methods, FIFO, which is first in, first out. And that means the first one purchased is the first one sold. And then they have LIFO, and this is the last one purchased is the first one sold. And then you have weighted average. And this takes all the batches and blends them together and gets one weighted average cost. And then the last methodology is specific identification. And with specific identification, you're recording the inventory by unit. So inventory cost is specific to each product. And this might be a jeweler, an example that they have diamonds. And so their specific identification is 1 carat, 2 carats, 3 carats, and the grade. And they're tracking those individually because they're so expensive. Same thing with like an automobile or special order purchase, something along that line. Now there's a few things that you want to keep in mind. First in, first out. Usually gives the higher profit. and lower cost of goods sold. LIFO usually gives lower profit and higher cost of goods sold. And the reason that is because typically the cost of goods increases during the year. And so you're taking the lower of cost from the beginning of the year and you're leaving the higher cost at the end of the year in your inventory. And it's not always the case. That's when prices are increasing. So let's walk through some examples. I'll shrink this down just a little bit. Okay. All right. So it says the company sells a part. It uses the FIFO periodic inventory system, and it wants us to determine the cost of goods sold if 4,000 units remain in inventory. So let's think about some steps. We want to method, and in this case, they're using periodic. And then we want to look at the flow, and it's first in, first out. And then we want to pay attention to the dates. Of purchases and sales. And the reason that we want to do that is because if something was sold in the middle of the period, say, then with the first in and first out, some of these units may not be available. Now in this question, it looks like we're using a single period. So we don't have too much to worry about. Sorry about that. And so we don't have too much to worry about. So we want to determine how many units were sold. And so we take a look at our total inventory minus our ending inventory. And we end up with 10,000 minus 4,000. And that equals 6,000 units. So with the first in, first out, we're going to go back and now count the batches that are going to apply. And I'm going to label them purchase 1 and purchase 2. Sorry, I gotta save this real quick. So we have the beginning balance, our beginning inventory. We had 2,000 units. Then we have purchase 1. And that's 3,000 units. And so now we're up to 5,000 total. So we need 1,000 more. So we have purchase 2. And we need 1,000 more of those. And so now we're at 6,000 total. Okay. And what we have to do is multiply those out by their unit cost. Now it's already done for us for beginning inventory. But it won't always be. So I'm just going to sort of take the 2,000, multiply it by its cost, 8.0. You can see up there that the total is 16,000. You wouldn't have to do this, but just so you know, in case it's not posted, 8.2. That's 24,000. And then 1,000 times 8.6. And that should be 8,600. And so we sum that up.
Isn't the 24,000? No, it's not 24,000
Oh.
because it's
24,600. Thank you. All right. And so I think that totals out to be 49,200. And so that would be your cost of goods sold.
How did you get 5,000 and 6,000 for the?
That's just running total. So 2,000 plus 3,000
Oh, okay.
plus the 1,000.
Why is purchase 2 only 1,000 units and not 5,000?
Because we only sold 6,000 units.
Okay.
And so we only needed to get to 6,000.
Oh, okay. I got it now. Thanks.
All right. Okay. So that gives us our cost of goods sold. And we know that the answer as a result has to be A. But just real quick, how do we get ending inventory? And remember that your total inventory can be broken out into 2 parts. And so it equals your cost of goods sold plus your ending inventory. And really, we also call this the cost of goods available for sale equals your cost of goods sold plus your ending inventory. So here we had 83,600. And that equals the cost of goods sold plus the ending inventory. So we take 83,600, subtract the cost of goods sold, and that equals your ending inventory. So we have 83,600 minus 49,200, and that equals your 34,400. Okay, let's try this one more time for the poll. All right, did that pop up for you guys this time?
Yes.
Okay.
No.
It didn't come up.
No.
All right, let's try that again.
It came up and I was able to vote on it.
All right, let's try it again. Yeah, one person was able to. Okay. How's that? Did that show up for everybody?
Nope.
No.
Now I don't even see it anymore.
That's weird. So click on your computer, hold the Alt button and hit Tab and see if it pops up for you in a Zoom location.
It didn't.
No, it didn't.
I don't know what I did wrong. Other class had no problem with it. Guess I'll have to figure out that one. All right. Well, does anybody have any questions so far?
For the end, oh, wait.
Okay, if you come up with a question, you can just type it in the chat. I won't put you on the spot there. Okay, so now we're switching to LIFO. Good, okay. Yeah, so the other question was if you want to do the ending inventory, could you just take the 4,000 and multiply it times the batch price? And you could. So that calculation, if I wanted to just calculate it, the ending inventory would be to take the remaining units. Which is equal to 4,000 and multiply it by the 8.6 cost, which should still come up to 34,400. Now, the reason that I did not do that is that if you have more transactions afterwards, it could take you a longer time. You might have to do that anyways, depending on how many transactions you have, but that is definitely a way you can do that. And you also could have worked backwards from that, calculated that just because it's off of one piece and then backed into the other answer as well. So mathematically, there's a couple different ways to do it. Now we're moving on to LIFO, and we still have the same set of circumstances. And I saw that. Thank you, Chris. All right. And so we have 4,000 units that remain unsold. So we sold 6,000. Ending inventory is 4,000. But now we're using LIFO. And so we have purchase 1 and purchase 2. And so last in, first out means that we're going to use purchase 2 first. And so that was 5,000 units. And we're going to use purchase 1 for 1,000 units. And so that would be our 6,000 units sold. Now to calculate the cost, take our purchase 2 batch. And again, you don't have to do this because it's all added up there and we use the total, but just to draw it out, 5,000 times 8.6 gives us 43,000. And then purchase 1 1,000 times 8.2. And so that'll equal 8,200. And so our cost of goods sold equals 51,200. That's math in my head, so you might want to check that with a calculator. Oh, no, we're good. That's one of the choices. And then to calculate ending inventory, 83,600 minus the 51,200. Gives us 34,400, hopefully. No, 32,400. Okay.
So are our two costs of goods sold the same, or are they different? Using
So
LIFO?
in this case, they were about $2,000 difference. If you look up here, we had a cost of goods sold.
Okay.
And then down here, we had 51,200. So if you see the prices changing, you'd expect to have different figures. And what I said earlier, we saw a pattern here where the prices are increasing. Notice that our cost of goods sold is less than using FIFO than it would be using LIFO. Any questions? Okay, so now we have weighted average. And so this one's a little easier when you have everything all spelled out. And so we can just take the total cost and divide it by the total units. So here we have 83,600. We divide that by 10,000 and we get 8.36 per unit. And then we multiply how many are sold. In this case, the sold equals 8,000. Ending inventory equals 2,000. And so our cost of goods sold equals the sold figure times the weighted average cost per unit. And so we have 8,000 times 8.36. And that's 66,800. 880, excuse me. And so that leaves our ending inventory All right, so I have a question. I can't really interpret that. Explain the ending inventory of 8,000 and number of sold. All right, so it says 2,000 units remain in inventory. Okay, all right. So yes, thank you for correcting that for me. All right, so it says 10,000 units, and then you had 2,000 units that remain, and so that's how I got the 8,000 units sold.
Okay, that was easier than I thought. That's my fault.
This is making a lot of sense now.
That's good. That's good. All right. And then so your ending inventory, you could do the same way. You could either subtract it or you could take the units and multiply it by the weighted average cost per unit. And so you get 2,000 times 8.36. So that would be 16,720. So you could do that way too, or you could just take the 83.6 and subtract out minus the 66,880, and that would equal your 16,720. Okay, any questions there? Okay. So keep in mind that this is only one period, and were this sale to occur in a perpetual between purchases, you'd have to figure it out. So periodic, a little bit easier to use because you're just kind of taking things at the end. Perpetual, you have to pay a little more attention to the dates. Okay, so we got about 10 minutes left. Okay, so why don't I give you a shot and you guys can let's try the FIFO, do part B in question 510. By the way, today, don't forget to do the reading quiz if you haven't already done it. I forgot to remind you guys last class, so I gave you a little extension on time. Yeah, somebody asked if they're being graded as extra credit, and the answer is yes, as of right now. If I notice that people are starting to struggle that aren't coming in here, then I will do them as mandatory grading. But right now they're extra credit, so they're worth 1, 2, or 3 points. They won't show up that way in Pearson, but when I transfer them over to the grade book, they will. The reading quizzes are in Pearson, yes. Okay, so let's go back and look at this. And hopefully, yes, I will post the exam 2 study guide. Actually, I think it should be already posted, but I'll make sure it is. All right, so now we're looking at this question. Got another chat question. All right. And as you do part B, and so here we have to look at, okay, what do they mean? Where is it going to go? So cost of goods sold, it's an expense. It's going to be on the income statement. And so how many units did we sell? We sold 700 units. And we're using first in, first out. So we have 400 times 10. And we're going to add to that 300 times 11. And there's nothing on the statement of cash flows and nothing on the balance sheet. Now for inventory, what we'll have left over, we had 1,000 units, we sold 700, so we're gonna have 300 times 11. And somebody asked about the timing of the exam. The plan for it now is next Friday. I'm gonna try to get this all on one page, so I'm gonna pop that down. All right, sales goes on the income statement, and you sold 700 units at 15. and then gross profit would be the difference between the two. Okay, so this is what, 4,000? And this is 3,300. And so that total would be 7,300. 15,700, 350, 1,050. No, 10,500. Right? And so this would be 10,500 minus 7,300. So 3,200. Okay. So somebody asked how I got the 300, and so I'm using the chart up here, which I'm going to highlight right now. And I'm just going to highlight what was purchased and in inventory. So this is the cost of goods available for sale, 1,000, and then 700 were sold. So I ended up with 300 left over. And this would be 3,300. Okay. Now we would expect LIFO to be less net income, or in this case, gross profit, because we would expect the cost of goods sold to be higher. And so if we make that calculation here, we have 600 times 11 and then 100 times 10. So 6,600 and 7,000, or no, I'm sorry, 1,000. And so our total's 7,600. Our inventory, 300 times 10 equals 3,000. Our sales would still equal the same number below, 10,500, and our gross profit would be 10,500 minus the 7,600, which would be 2,900. Okay.
How'd you get the 10,500 for sales again?
Okay, I'm just gonna I'm gonna highlight it on my screen. So it says
Oh, okay.
sales on account, 700 units at $15 each. And I made that calculation just a little bit lower there. And so normally I would draw the old line up from here to here. Let's see if I can draw. Row. I didn't do it. Okay. Any questions? All right, so you don't have anything due this weekend except for do the quiz today. And then the study guide should be out there. If it's not, I'll post it. Take a look at it. Monday, hopefully, we'll wrap up this chapter. And then on Wednesday, we'll do a little bit of review and answer any questions that you have for the exam. And then Friday, we'll do the exam. So you have a good weekend.